Welcome, welcome. Very good evening, everybody. Welcome to this live webinar tonight. It is the 24th of September. We are right in the middle of the recovery period. We are heading towards a good recovery moving forward, right? That's what everybody says. Hopefully, right? It is great for everybody to be able to join us on a Friday night. I know, we are still not in a state of the country where we are all out on a Friday night partying. So it's good because I can catch you guys here to listen to something very, very important, right? So today it's a very interesting leading in crisis session, right? Now, for those of you who have just joined us and you are wondering who is this guy speaking to you on a Friday evening and Friday night, for those of you, hi Rosaimi, hi everybody. Feel free, everybody, to type what you need to type. Say hello if you need to say hello in the chat window. Just make sure that when you type a chat that you have hosts and panelists selected in the Zoom window. Yeah. And for those of you who are on our Facebook Live, we are actually here in the Zoom, right? So do come and join us in the Zoom session. This is where we get to ask all the questions. We get to drill our speakers. We get to get all the information that we want on today's topic. If you are still on the Facebook Live, that's going to expire in about 15 to 20 minutes. So please do come join us in the Zoom. There is going to be a registration link there. Very, very quickly, very, very fast. Just register and come on the Zoom call. This is where the action and the great Friday night party is happening. Okay? Okay. So for those that know us and those of you who are from the Owner Circle community, welcome. Thank you for joining us once again on a Friday night. For those of you who don't know us, well, Owner Circle, we are a business academy and a community. We specialize in helping entrepreneurs to achieve massive transformational growth through proven tools and systems. And some of our trainers are experienced and current business owners and have gone through the grind and have scaled their company to massive growths. And this is what we do. Some of the things that we do is sessions like this, Leading in Crisis, where we bring on experts. We bring on subject matter experts to share with us as entrepreneurs on what are the key tips and tools and tricks that we may not know that may help us in the business. And today is going to be an amazing night. So I'm going to just let 1 or 2 minutes for people to just stagger in. Maybe they're just finishing dinner. I'm not so sure. But let's see who's in here tonight. Hi, Michael. Thanks for saying hi. Hi, Emily. Hi, Jason. Who else? Hi, Cindy. All right, I see a Cindy Fu. Hi, Jing Swan. Hi, Jason. Hi, Rosaimi. Right. Hi, Benny. Benny Tan is here. Who else? Hi, Bravo, Louis. I love your name. Your name is about celebration. Thanks for coming, Bravo. Hi, Jean. Right. Hi, Mickey. Hi, Ao Kiet. Right. Some of the names are truncated, so I can't see who you are. But you know what? Thanks so much for coming. Yeah. Myself, I am a business owner. I'm a serial entrepreneur. I'm the current owner of about 9 different companies. And one of my passion is hosting and talking a lot. So that's why I've been put to this seat here to just talk. Right? And then I have got one instructions, guys. My instruction here is just stay there and talk and don't stop for 5 minutes to wait for everybody to come in and then pass it to the actual experts. So that is my role. All right. So hey, Jules. Hey, Ishan. Right. Hey, welcome. Hey, Jules. Who else is here? Okay. Wow. Looks like a good turnout tonight. Right? Everybody is not doing anything on a Friday night, but they're here. So awesome. I love these times. Okay, we have 1 more minute until I'm going to start and I'm going to hand you over to the real experts. And do stay till the end. Yes, Michael, I'm afraid to go out as well. Actually, I'm not that afraid. I'm just very tired from going out because I've been going out little bit. Slowly but surely. Right? Okay, so do stay till the end because at the end, we do have something to share with you guys, courtesy of our speakers. So you will want to stay right till the end, yeah? Don't leave halfway and go and watch movie. No more movie to watch. Tonight, no movie. All movie cancelled tonight. All Netflix also cancelled. Okay? All right, let's get straight to the point. Everyone, I'm very, very privileged tonight to welcome 2 very esteemed and established speakers. They're obviously not speakers. They're very experienced professional. You know, I added up, I total up, right? The both of them only has more than 50 years of experience, you know, in the banking industry and in the topic that we're going to be sharing with you tonight. So amazing experience, right? So what is going to happen tonight? They are going to be talking to you guys about how to manage specific area of finance. So in the area of finance for entrepreneurs, tonight is going to be about loans. I'm not sure about you guys. How many of you guys have experienced taking loans? In the past, when I first started my business, you know, I'm a typical Chinaman, right? I think, no, cannot take loan. My mother said, cannot owe people money. Cannot borrow, right? You borrow, bad, right? So I never took a loan. But then, when I really needed, as a business owner, when I really needed, and then I went to the bank, can I please have a loan? Then the bank reject me, you know. I'm like saying, why? I really need money. Why you reject me? And I did not understand that. So we're going to clear everything up tonight and we're going to listen to them and they're going to tell us why. So they're going to be sharing with us the common rejections of why banks typically reject loans so we can be prepared for it. They're going to be sharing with us, right, what are the areas to look for when we are actually applying for loans, especially in this time where there are good facilities. Later, you know, David, Brenda, you can correct me if I'm wrong, but if I'm not mistaken, right, this is the current time, which is one of the lowest base lending rates of all time, right? So it is a very good opportunity for us to think about what are the areas with regards to how do we need an expansion with the availability of funding, okay? So I'm not going to talk too much. I'm going to leave it all to the experts. Now, who is these experts that I'm going to bring forth tonight? So we have two, remember, combined 50 years of experience, not combined weight, combined years of experience, 50 over years, okay? We have David Yeoh, right? And David Yeoh is a business advisor, a certified credit professional. He personally has held discretionary approving authority of up to 10 million. No, he himself, can you imagine? He himself can say yes to 10 million like that, right? And, you know, he has sat in credit committees with approving limits of 100 million. You know, when he was at the bank, he has more than 30 years of banking experience. He's held various leading roles and as executive senior vice president, head of SME banking, head of retail distribution, head of business banking center, many head lah. Everything is so head lah, right? And he has successfully established and spearheaded two local banks, SME businesses. Can you imagine? He grew one from 1.4 billion to 3.5 billion. Another one from 750 million to 3.8 billion. Wow, I say all these credentials so I run out of breath. It's too many, David, too many. Okay. The second person that I'm also going to bring on board here is none other than the pretty Brenda Lam, right? Now she's a business advisor. She's a chartered certified chartered banker. She has more than 20 years of banking experience in various leading roles. From the most recent, which was the Senior Vice President, Head of SME Product Development and Marketing, Sales Training and Performance Tracking, Events Planning, Head of Retail Segment, Head of Bank Assurance, Head of Payroll, Head of Deposit, Head of Credit Card and Personal Loan Product Development and Marketing in both local and foreign banks. Also, many head lah. Wow. These two, I can tell you, it's amazing, right? She has personally won the Asian Banker Excellence in Retail and Financial Services for Best Consumer Credit Product Award in 2004. She herself has completed the CIMB NTU Accelerated Universal Bankers Program from the Nanyang Business School in Singapore. Whew! Wow! I can continue for another 10 to 15 minutes talking about these two credentials, but I'm not going to, because we want to listen to them and they are the superstars for tonight. Ladies and gentlemen, without further ado, let's listen to how can we as entrepreneurs do better with regards to our loan applications. David, all yours.
Hello. Good evening, everyone. Hey, Ray, thanks for the introduction. You make me feel so, so high. I don't know what to say now, but I think to be fair to everyone, because I think all of you tonight, you have been taking your time off to come and listen to us. I will do my very best, try to share with you my experience in the bank And things, especially now, the in thing is loans. You know, the market now is bad, and so it's not easy to get loans. And you probably need to know why and how you should position yourself. You want to get a bank loan now. And like what Raymond say, you don't look for an umbrella only when the rain comes. You must get the umbrella ready when the rain is there. So the thing is this: never go to a bank and ask for money when you need it. You plan ahead before you go. Before you need the money, you must be planning for the loan. Then you will not be, in any position where you might not be able to get it, and then it might affect your business. Okay. So, Brenda, come the first slide. Okay, I'm going to share with you a few things. Basically, what does the bank look for when you go for a loan application? What are the reasons why they reject the loans? How to prepare for loan applications and probably the required documents. Okay. So now these are the key things. First thing is, I think the word working capital, it looks very simple, working capital. Now, actually, in real life, what is working capital? Now, this question, banks always use on you, but you yourself must understand what does the bank want to know when they ask, what is your working capital needs? Now, what is that? Basically, if you ask me, if you're the manufacturer, basically the time you buy your goods, the time you take to manufacture, the time you sell and to collect the money. So, for instance, if you're a manufacturer, you hold stock for, say, 20 days, then you manufacture for another 30 days. Thereafter, you sell your goods and you need another 30 days before your buyers pay you. Or in all, you have actually an 80-day cycle. So what it means is this working capital the bank gives you will cover for these 80 days in terms of your supplies, your salaries, and whatnot, right? So you need to be very clear when the bank asks you, what is your working capital needs? How many days? So, of course, to answer them, the longer the days, the better, right? Of course, you still need to justify why you say it's 90, why it's not 60, why it's not 180 days. Actually, if you ask me, it all depends on what business you're in. If you're a contractor, probably you need 60, 90 days. But if you're a manufacturer, you might need more, depending on what you manufacture, of course. So as business owner, you will know better, actually. So sometimes don't depend on a bank to tell you how much is your need. You should tell them. After this, I hope you understand what I'm trying to say. Okay, second thing, asset financing. This is very simple. This is when you buy a property, okay, and let's say you want to borrow 80% of the property. Your portion is 20%. The bank will finance 80 over a period of probably 15, 20 years, 25 years, depending on the banks. I think you all know, right? Each bank now, they look at credit, they look at borrowings all in different angles. So it's current scenario, it's very difficult to tell you which bank to go to because each bank will approve or reject a loan based on their own criteria and own reasons. Of course, there are a few standard criteria, but generally they differ from bank to bank. Now, the second thing, financial viability, source of repayment. Now, what is this source of repayment? Now, in layman terms, source of repayment means for the bank, this is for the bank. For the bank, it means after paying your salary, all your expenses and everything, what is left to pay the loan? That is what they look for when they ask you, what is your source of repayment? Basically, let's say you sell $100, okay? You less your expenses. After everything, your salaries, you have left 20 ringgit. Now, this is what you need to pay the loan. Now, if your loan is 30 ringgit, now your repayment capacity is affected. So the bank generally will not approve the loan if this is what the situation is. Now, after looking at the source, now they will come and decide and tell you what structure you need. Is it short-term, long-term, working capital, asset or what? Now, the key thing is what do you mean by short-term financing? Now, short-term financing basically is one magic word, overdraft. I hope you understand what is overdraft means. Overdraft interest is calculated on a daily basis, meaning to say if you use 1 day, they will charge you 1 day. If you use 10 days, they will charge you 10 days. That is a flexible overdraft. You can use and cover the very next day or be even the same day, and interest will not be charged. Now, long-term. Now, what is long-term? Now, long-term means you are buying a property, and if the property, they will give you a long-term loan of maybe 10, 20 years, 30 years, depending on what you need. Again, all these will depend on your repayment capacity, if you ask me, right? So as for the tenure, now tenure again, For working capital, it's just revolving. Basically, overdraft is on a daily basis, and they only charge you as how much you use and for how long you use. Whereas if you go for a long-term loan, it is structured from day one. If it's 20 years, they give you a fixed installment plus interest, and you pay that every month. Okay. Now, asset financing, rates. Now, what rates? Basically, if you're talking about working capital where it's revolving, that means the bank do not ask you to pay back. You pay back the overdraft and use it as and when you want. Now, for overdraft, the rates are always higher. Whereas if you are taking the money to finance a property, then the rates are very, very much cheaper. Okay. Now, the last part, the 5 C's. What do you mean by C's, right? What is the 5 C's? Go on next page. Okay. These are the 5 C's. Basically, the first most important you ask me is character. All right. What is character actually? Now, in simple layman terms, it means that is your willingness to pay or ability to pay. Meaning to say, sometimes there are some people, the character is not good. What do you mean by not good? Is they actually can pay, but they tend to delay on the loans. Now, there's always another group where they actually want to pay, but they cannot pay because of some business issues. So basically, when we talk about character, the key thing is the bank wants to see what sort of character you are in. Now, how to decide your character is good or is it bad? They will look at your past repayment track record. That's how they decide to give the lending. Now, second, capacity. Ability to repay. Basically, they're looking at, let's say, again, I want to say this. For instance, you make 100,000 net profit a year. Okay, after lessing everything is 100,000. Now, your installments, is it more than 100,000? If it's more than 100,000, probably your chance of a loan would be approved, paid, provided all your other things that they look at are okay. But if your net profit is 100,000 and your installment yearly is more than 100,000, exactly, the bank will definitely not give you the loan, because based on this itself, they know that you cannot pay already. Okay, even if you meet all the other criteria. Now, the third thing, capital. What do you mean by capital? Now, capital actually, if you ask me, is what you put in the business. Now, sometimes banks, get a lot of people, even bankers themselves, get confused with this, with this word capital. It means gearing. Now, lots of people misunderstand the word gearing. Now, what does gearing means? Now, gearing is actually not how much you borrow. Gearing is actually how much you put in the business as against how much you borrow from the bank. Basically, when they say your company's gearing is 3 times, it means to say you have put in only $1, the banks have financed $3. So, of course, the higher the gearing you go, the more riskier you are, and chances are the bank will, what they call it, not lend you. So basically, that is what by gearing. Remember this, guys. Most of the bankers themselves, when you talk to them about gearing, they say, oh, your gearing is 10 times. You ask them, what do you mean by 10 times? Basically, what it means 10 times is you have put in $1, the bank have lent you $10. That's gearing. Security, of course, is collateral. Basically, you ask me, there are many forms. You can offer your house, your factory, and nowadays the in thing in the market is where they give you a loan, a working capital clean without collateral, but against your guarantee. Again, that depends on your other criteria as well. Now, market condition. Now, we are facing now unprecedented, or what do you call it, times where COVID, nobody has known that this will hit. Now, COVID has really hit the whole world, and Malaysia is not spared. All the businesses have been affected by COVID, and until now, there's still actually no end. I mean, it's very sad because of this COVID, lots of businesses actually have closed down. At first, they thought it was temporary, but to restart a business after closing for 3 months, it's not easy, guys. Your workers, if you've been paying, they'll be around. If you've not been paying, you probably need to hire additional people. So current condition, if you ask me, is very tough. Most of the banks now, when you're going to buy a property now, the banks are now shying away. Personal loans are not easy to get. So the in thing now, if you ask me, is the funds that the government has now taken out into the market to help. Where later part Brenda will share with you what you mean by this scheme of the government, where the interest rates are cheap financing is good, easier if you know which bank to go to. Brenda, next one. Okay, now this is the key thing now. Here, I want to share with you the common reasons of why a bank reject a loan, right? The first one, weak credit or lack of financial track records. Now, it simply means you don't have a record to show the bank that you can repay a loan. This is one basic thing the banks always will decide. Now, again, some banks put a lot of emphasis here. They might reject the loan straight away. Some banks will look at other things like basically maybe your personal track record, not the business track record. Now, if your business is new, some banks will give you loans if you're 2 years old. Some banks need minimum 3 years. Some banks, basically, they say even 3 years not enough. Now, question is which bank to go to, right? I think if you are interested in this, probably later you can talk to Owner Circle. They might be able to share with you a little bit more on this. Now, lack of commitment, the second one. Again, this is about gearing. How much you have borrowed has against how much you have put in. The more you have borrowed has against how much you have put in, the more difficult a loans get rejected. And again, some banks put emphasis on this. Some banks don't even bother about this. Again, it depends on what sort of loan you're taking. Now, no business succession planning and advance age. Now, this is very typical of any Chinaman business, or I mean, I'm not racist. I'm just saying when I would use the word Chinaman, I mean those businessmen where they have been toiling in the business for the past 30 years. When you ask them, who's going to succeed you? They look at you. Actually, this is sometimes very crucial in the bank application. Always get ready, your children or maybe a new partner who's younger to come in. And that person, if you ask me, eventually should be a key person. So basically, if you ask me about succession planning, most businesses currently, SMEs, the size that I'm talking about, do not have. Now, I think if you don't have, it's time to bring in a partner or maybe bring in your children. Weak management. Now, what do you mean by weak management? Wait, I can manage a business and you as a banker tell me my management is weak. It's not really that, guys. It's actually talking about changes in your management, if you ask me. What I mean is this. Your business is 10 years old. Now, in these 10 years, your directors, your shareholders, more plastic is your directors. There have been so many changes of directors. People come in, people go out, people come in, people go out. So if they see too many changes here, again, the bank gets scared. The bank is wondering, what is this? Your business is only 10 years, but you've changed 6 directors. No, there must be something wrong. Now, this could again affect the viability of you getting a loan from this bank. The next one, adverse credit checks, secrets, CITOS, and D-checks. To me, the key thing now, all banks look at now is secrets. But the issue here is different banks look at secrets differently, right? I give you an example. One bank says, in your 1 year track record in secrets for that loan, you cannot have more than 2 overdues. The moment you have 2 overdues, they will straight away reject the loan. But another bank you go to can even take 3 overdues of 2. And the third bank you go to will say, the last 6 months, I do not see more than 2 twos. So what I'm trying to tell you here, guys, is this. Different bank has different appetite. And when they give a loan, they look at your secrets. Now, try at best, guys, your business and your personal secrets, you have to try to maintain it as flawless as possible and try to minimize overdues. But then again, sometimes under these times, it's easier said than done, right? You know, of course, I want to pay my installment car on time, but what the hell, man? I can't even open my business. I can't even pay my workers. The last thing I want to pay is my car now, right? So these are the times where a lot of people are affected. Now, but the bank will never compromise if they see your secrets is an issue. So be very careful about this secrets record of yours. Of course, the next one, you're talking about market outlook is very unfavorable now. In fact, I still remember 2 years ago, the banks 3 years ago, the banks were all rushing to finance oil and gas companies. 2 years later, when they crash, you talk about oil and gas, they will shut the door. So banks are banks. Typical of banks, they will always want to lend at the height. To me, my years of experience tells me this, I would lend, if my father is a bank, I would lend at the bottom of a circle, not at the height. But most of the banks now, they always look at the height. I don't know why, or maybe somewhere near the height they lend you. But when the crash comes, they disappear. But to me, after they the crash comes, those companies that are still standing, these are the companies you should actually start lending now. But until today, oil and gas is still having problems from banks getting loans. Again, next one is inappropriate facility structure versus your loan amount. Now, what it means by inappropriate facility structure is this. A lot of Chinamen, when they, those days I still remember my time in the bank, when they buy a property, they always say, I want an overdraft, a full overdraft. You know what I mean? Say a property is 2 million. The bank's finance 1.5 million. They will insist on the bank, I want full overdraft. You know why? For them, it's simple. If I have a full overdraft, I can cover anytime and save interest. But they always forget one thing, you know. A property that you buy is always long-term. Anything long-term must be financed by long-term. Basically, a term loan is a better, more structured way of financing a property purchase, not an overdraft. Guys, remember, if you're one of them, I think it's time you look at the overdraft, because if you are asking for a loan of 1.5 million to buy a property and your overdraft is always 1.3, 1.4, your structure is wrong, because you end up paying more interest rather than taking a term loan that's 20 years. And the last one, of course, submission of documents. Guys, typical of businesses, I don't blame you. Half the time, your focus is more on the business, on collection, on make sure when is your next collection due. When it comes to submission of documents, you tend to defer. Tend to slack here a bit. But again, one thing I also want to defend, stand on your side, is because different bank again has different ones of documents. Some nowadays even ask for what, ask for your electricity bill, ask for your water bill to prove that you are doing business there. To me, well, you have done a site visit, right? You saw my business there, but you still insist to ask for my electric bill. Well, to me, what the heck for, man? Right? Just to prove I'm there. Don't forget, even I give my electric bill, tomorrow morning I can ship and go off. You know what I mean? So you ask me, sometimes these are the things that the banks are tight at. Probably is the risk people who says, oh, all this must be there. You need to get it in, otherwise you can't even process. Now, these are the things that the banks are very difficult to comprehend, if you ask me. All right. So basically, I end my presentation here. I hope what I've shared, is enough for you to really at least understand sometimes why your loans are rejected, and if they're rejected, what you should do. Go and see Ray of Owner Circle. Okay, Ray, back to you.
Go and see Ray because Ray is going to give money. No lah,
yeah. Or find a way to give money.
David, thanks so much for sharing. Before I hand over to Brenda, I have one very, very quick question, David. You mentioned about this is very unprecedented times, right?
Yes.
And but is it a lost cause, right? Is it that most businesses just don't have to bother applying loan because they know already that it's so hard to get a loan? What is your thoughts?
All right. Okay. If you ask me, we are lucky in Malaysia. The government has actually came out with a few sort of funds since day one. I think last year they started with TRRF, where they gave loans. They gave the banks money actually to lend to the public, because if you give it to the banks, the bank will charge the rates sky high. So they fund the loan, but the banks have to take the hit, the NPL if they stop it. But the rates are very cheap because it's funded. The funds are coming from Bank Negara. So the rates are 3.5%. Now, because of the COVID that extended, the bank came up with a second package recently called TRRF, which Brenda will share with you later, called Targeted Relief Fund. Again, the rates are 3.5. The rates are very cheap. Now, the thing is this. Now, if your business has followed up and there's no business ongoing, you might have a problem getting a loan now. But if you're still there and your secret is still clean, there's still a chance. Like I say, Ray, there's provided you have to choose the right bank to go to. Some banks are very strict, you know what I mean? You see a drop in turnover in your sales for the past 6 months, they refuse to lend. But let me ask you a question again, like what you say, Ray. In this current times, which company can show turnover higher than last year, if you ask me? Besides
Definitely not.
Besides the glove factory, if you ask me, right?
Yeah.
Otherwise, everything has dropped. Now, some banks will still give you loans provided your drop in sales is 30% and less. Some banks allow 50%. Some banks 20%. Again, different banks, different criteria. They have different ways of weighing a loan application.
Okay. Thanks so much, David. We're going to come back to you later when we open up for Q&A. Everyone, just a quick reminder, if you have any questions to ask at all, please ask it at the chat window. I'm going to pick out those questions at the end. We're going to let David and Brenda do their presentation and share with us all the information. And then at the end, stay till the end because we're going to open it up to question and answer. You can do it two ways. Put it in the chat window, or there's a Q&A button at the bottom of your Zoom screen. You can also hit that and ask your questions there. So I will watch both sides, right? I got two eye, right? One eye watch here, one eye watch the chat window. Okay? Now, the next person I'm going to bring up, I'm going to hand you over to Brenda, who's going to be talking about what David just mentioned. The second round of the funding that's provided by the government, the help provided by the government, which is TRRF, a couple of very important checklists. And you know what? If any one of you are interested, how do we prepare for it? Brenda, can I bring you on now and share?
Thank you, Raymond. Thank you. All right, ladies and gentlemen. Now, for SME owners who are looking for low interest rate financing, I would like to share with you the Targeted Relief and Recovery Facility, in short, TRRF. Now, this facility was launched by Bank Negara to help SMEs, like what David mentioned, due to the pandemic. It is a working capital loan, meaning no collateral is required. Now, maximum loan amount is up to 500,000 per SME at a very low interest rate of 3.5% per annum, and with minimum 6 months of moratorium, depending on which bank you manage to get the funds from. Now, here I would like to highlight to you the difference between the TRF and the normal SME loan offered by most banks still, yeah. So if you compare on the same loan amount of 500,000 at 10.45%, which is BRR plus 5, where BRR is about 5.45% now, versus the TRF at 3.5%, you will be saving a huge interest payment of 142,000 in 7 years. Yeah, the maximum tenure is 7 years. So while this fund is still available, try to take advantage of this if you need more funds to ease your business cash flow. Now, as you know, for the bank loan application, there's a long list of documents that you need to prepare for submission. As mentioned earlier, also, incomplete submission of documents is one of the most common problems SME borrowers are facing. That's because very often SME owners, they do not understand what loan documents are important. And the key is to know what you should or you should not review to the bank. Yeah. What I mean is that, you know, sometimes if either you under declare or you over declare or you over submit, yeah, it will affect your loan application approval. So the key is to really know, you know, what kind of loan documentations or information to provide. Yeah, so having said that, it is very crucial that you seek the right and accurate guidance in helping you to better prepare for your loan documentations. Now, here's a very simple process that I would like to share with you to take note, yeah, so that you can prepare earlier and to know exactly what you need to do, yeah, so that you don't need to scramble. Very often, business owners, like mentioned, you're too busy, yeah, in bringing in the sales, and you overlook when you need your funding, and by the time when you need it, okay, you do not have the right documents or your financials are not, you know, done properly. Yeah, so keep tab of your business performances so that you know exactly and you plan ahead, okay, when you need the extra funding for your expansion or, you know, to sustain. Okay, also knowing the right bank, which bank to apply based on your industry or your financing facilities will make a lot of difference as well in maximizing your approval rate. Yeah, because again, different banks have different risk appetite, different loan evaluation criteria. Yeah, so not to waste time, you don't want to be like taking chances, you know, like blindly applying and submitting your loan documentation to bank A, bank B, and bank C, and, you know, at the end of the day, not getting your loan approved. Yeah, so knowing what to prepare, which bank will save you a lot of time and hassle and, you know, heartache lah. Okay, and thirdly, of course, is to plan early and to be very clear of your financing needs, like what David has mentioned. Do you need a short-term or do you need a long-term facility? So that, of course, ties back to how you plan your business direction, yeah, how you plan your business financials. Again, very often, the kind of SME owners that we have been serving, a lot of times, just like what Raymond mentioned earlier, you know, the taboo is like, oh, want to borrow loan, no face, or, like cannot, yeah, actually it's not. Yeah, it is always good to leverage on the loan, especially now when the rate is so low. Yeah, so take advantage of that. So again, last but not least, seek for the right guidance and the right, expertise to help you with this. So that's all I have. And Raymond, back to you.
All right. Thanks so much, Brenda. That was very quick, sweet, and straight to the point with regards to what we really need with regards to our documentation. All right. Now, everybody, we're going to be opening up this section now. They wanted to just deliver something quick so that they will open up more time for Q&A. So do please ask your questions. So you can do it two ways. One is to type it in the chat window or type it in the Q&A at the bottom of your Zoom screen. You can see the Q&A button. Type it in there, right? So I see some questions already coming up, right? So do ask your questions there, okay? So I'm going to bring David and Brenda up now, and we're going to be spending the next 20 minutes or so asking them very important questions about loan, okay? This was already answered in the chat window, but maybe we can just repeat it for those that could not see the chat window. The question here was from Michael, which is, what is DCHEQS?
Okay, that is called D-checks, meaning to say this is a system maintained by Bank Negara where those days, I think they have discontinued this, but it was there until a few months ago, where they say that any businesses, if you have bounced checks, that means you issue a check without funds in your account, and your account has 3 bounced checks, the bank will close your account, and you have to go to check jail for 6 months. But if it's within a year, it becomes 6 checks, then you have to look at 12 months, and has more checks is bounced. The longer you've been in jail means you're not given a checkbook. You can't issue any checks to pay your suppliers, because in businesses, there are a lot of people who still issue post-dated check. By right, you should not. But I think this business model until today is still happening in Malaysia because of the business. It has been like that for many years. I think it will stay for many years.
That is how a lot of people manage cash flow, right? In the past.
Yes. They drag your payment, and then there they delay. They also will delay their suppliers. It's all normal. This is business. You ask me, it's about managing your cash, basically, how you do it. If you drag too long, will the supplier give you? I don't know. It depends again your track record. Okay.
Yeah. And why was this mentioned, David? Obviously, is it because if you have bounce check, obviously that will affect your loan application?
Yes. Earlier, yes. Now, because of, again, I think they removed this because of the COVID pandemic. Because basically, I think the Bank Negara has more or less anticipated that lots of people could have problem with this. Because mind you, imagine you have a current account in the bank, and then the moment you bounce 3 checks, they close your account. Imagine you got a collection of a check. Where are you going to bank in this check? This is what I think Bank Negara is trying the banks to stop them from closing the accounts of the businesses. I think Bank Negara has been very proactive this past 1 year, kept coming up with a lot of things. Our finance minister will come up with the funds, the special rates and all. So this is one thing I think they are looking to helping the SMEs.
Okay, all right. So let's go to the first question here that was asked by somebody. Maybe Brenda or David, you can take this. So how much do we know the amount of loan that we are entitled to apply?
Come again?
How much of loan amounts do we know that we are entitled to apply?
Okay. Well, again, just now, I think the first thing that I touched on was about working capital, right? I remember I told you, if you are a bank, okay, I make it simple. You're a trading company. For instance, you buy and you sell, right? So basically, when you buy, you have to pay. Do you pay on the spot, cash? I don't think so. Probably your supplier give you 30 days credit, right? So you have 30 days credit. Now, then you need to hold stock, because I don't think you can sell all your stock one day. Probably you need a month. So you need to hold stock for a month. So there's another 30 days. Then when you sell, do you sell on cash, like a supermarket, or do you sell on credit? So basically, if the supplier give you 30 days, you need to hold 30 days, that's offset, and you sell on 30 days, that means basically your working capital is 30 days of your turnover. But nowadays, the banks has made this very simple. So they don't want, the borrowers to get confused. Certain banks say your working capital is 20% of your sales. Meaning to say, if your 1 year sales is 1 million, you're eligible for 200,000. But wait, there's another bank that says, I can give you 30% of your turnover. Then there's another bank say, no, I need to work out your working capital requirement. Basically, again, counting this plus this minus that kind of thing. So again, the banks nowadays all have their own version. So like what Brenda has said, you really need to know which bank asks for what. Of course, when you ask for a loan, you naturally want to borrow more, right? So my take to you is very simple. The higher your sales, the more you'll be eligible, based on the percentage.
Well, Ray, just to add on to what David has mentioned. So yes, the bank will look at the cash to cash or the working capital cycle to determine that. That's why a lot of the times when the SME owners come to, or rather, when they ask how much are we eligible, they say, can I borrow 2 million? Then when they say that their turnover is only 1 million, so question is that do you need a working capital of 2 million when your sales is only 1 million, right? Yeah. So like David mentioned, the banks will look at your cash to cash cycle or your working capital cycle, but the other one to look at is also your current commitment. So for example, even if your sales turnover is 2 million, but you already have so much borrowing, right? You have already borrowed up to maybe 500,000 or close to 6,000. What are the chances? So so many factors to look at to determine.
Okay, cool. So you still got to look at the sales amount now. You still got to look at your revenues and how much you bring in now. Okay,
correct. And the current commitment as well.
Oh yes, and your commitment. Okay, another question here from Jun Hao. There are a few types of, obviously we know business entities, Sdn Bhd, LLP, and so on. Is there one better than the other in terms of trust by the bankers? So is Sdn Bhd more likely to get a loan than an LLP?
Well, okay, this is assuming the rest is the same. You just look at the entity itself. Basically, Sdn Bhds, of course, Bhds are the best, but we don't look at Bhds today. We talk about Sdn Bhds, private limited companies, right?
Yeah.
Now, as compared to a sole proprietor or a partnership, which one would the bank prefer? Obviously, the bank will prefer a Sdn Bhd. You know why? Because a Sdn Bhd, your accounts, your financials are signed off by a third party, which is an auditor. But sometimes I tend to differ here because you know why? Entity-wise, yes. But in a Sdn Bhd, again, your liabilities are limited. Whereas if you're a partnership or sole prop, the moment you sign for a loan, they can take your house, You know what I'm saying? But if it's Sdn Bhd, the company signs for it. The company, they can only wind up the company. But of course, the banks over the years have got smart. They don't ask for your joint and several guarantee of the directors. So they want to even tie in your family as well. You know what I mean? So basically, it's about it. If you ask me, Sdn Bhd is the one the bank will prefer.
Yeah, okay. Obviously, right? And I guess it goes back down to the whole banks being best banks, right? They're all very risk adverse, right? So whatever methods they would choose, which is the most risk free, right? Yeah. Okay, cool. This question is probably going to you, Brenda. Is there any deadline for the TRRF loan?
Yes, December 2021 this year, or upon full utilization of the funds, whichever is earlier. But you never know. Come December, maybe the government will announce another funds depending on how is the pandemic situation.
Maybe round 3,
Yeah, maybe, hopefully.
And some people are saying, don't bother applying because the funds have run out. Because I think a lot of people were saying that at the first round, and then now second round. Is that true?
No, there are still funds available, but again, they need to know which bank. Yeah, a lot of times it is very difficult for them to inquire because it's very hard for them to walk into the bank branches, right? And also for some reasons, the SME RMs, they probably will prefer to do the higher interest rate loan that I mentioned. So chances are maybe if they inquire directly, they will tell them, sorry, it's already run out. Yeah.
And when you both mentioned higher interest rate loans, you're talking about the overdrafts?
No, the normal working capital loan offered by the banks,
normal working
which is
capital
the
loan.
BRR +3 +5. Yeah, the banks are still offering that. Yeah.
Okay.
Yeah.
Oh, so it's not that every loan will automatically be TRRF.
No, no.
No.
Okay. So you have
So if you walk to
specifically
a
apply.
branch or
Yeah.
bank, chances are the RMs will propose to
Yeah.
you the normal BRR plus because it's a higher interest
Yeah.
loan. Yeah.
Yeah. Okay. Cool. Next question here. How different is an LLP applying loan or purchase properties compared to a Sdn Bhd? So this question is specifically related to properties. As LLPs, the share structure is different. LLPs are also exempted from audit. Any difference than what you said earlier, David, if it's regarding properties?
Okay. You're talking about PLTs lah, actually, right? LLP, PLT is the same, right?
LLPs, yeah.
Right. So this is called limited. That means, in other words, there's no, the difference is again here. LLPs, you declare your own financials, whereas in Sdn Bhd, you need an auditor to audit it. So if you ask me to buy properties, obviously the banks will prefer you using a Sdn Bhd. Basically, again, because of clarity from a third party, they feel that your financials are again true. You ask me, but like I say, I always say I want to qualify this. You know what I mean? But again, it's the Sdn Bhd. The banks will prefer Sdn Bhd rather than a PLT or LLP for that matter.
Yeah. Okay. Right. So regardless, everybody go get Sdn Bhd lah. Okay.
Yeah, true. Yes.
Okay. Next question from Lionel. Is it normal for banks to impose borrowers to get key man insurance as a condition to get loan approved?
Okay, this question I like. Okay, again, this varies from bank to bank, Now, this key man thing, actually, you ask me, it's not so much. What does the key man does, or insurance does? It just does this. If the key man, excuse me, if the key man passes away, goes to another world, then the insurance will pay off what the business or the bank. But in most times, how often this happens? So now banks are actually trying to sell this because why? The income is much better here. So some banks, some force you to take it. Some say, yes, you can. Some don't even sell that at all. Again, different banks, different needs. Basically, this is an extra ancillary business for the bank. That's all. There's no such thing as must buy. I think there's this competition act or something going on nowadays. You cannot force a customer to buy something that the customer doesn't want. Of course, there are other ways. They arm twist you. They said, I can give you a lower limit. Your loan will take longer to approve. You take this insurance, you get approved faster. I mean, those are things they can arm twist. I don't know. But you ask me, no, they cannot force this on.
Okay.
So just to add, sorry to say that when I was in the bank, I was the head of banca. So I have target to meet, right? So like what David mentioned, we have ways to do. So in a way, we just have to ensure that the salespeople cross-sell it lah.
Okay.
In other words, bundle it. So really depending on the bank, because the margin is good. So it really depends on the bank on how they want to structure and bundle the products. And nowadays, a lot of banks, or rather quite a few, are kind of making it compulsory lah.
Okay. Thanks for that. And I just want to say, right, thank you so much, David and Brenda, for being so honest with us tonight. Brenda, this question I think goes down to you. Question from Liu Kong. Is the TRRF loan based on company's revenue or EBITDA? Or both?
Company. Both.
Yes.
Again, there are many ways to look at. Certain banks will look at the financials, the audited account. Certain banks will look at the latest 6 months bank statements. So depending also on the entities, whether you are sole proprietor or your partnership or your Sdn Bhd. So if it's a sole proprietor or partnership, they will look at the directors, they will look at the partners, the owners, the sole proprietor. So to answer that question, really have to look at what kind of business entities.
Okay.
And also the banks. Different
so it's not just looking at revenue, right? So it's profitability.
Yes.
Right, and all that. So right.
All right. Profitability. That's right.
Cool. Next question here is this. So there's a question here is how do we determine the bank loan amount? We've already answered that. Whoever that asked the question, it is really depending on how much you bring in as a revenue, how much is your sales. That would be the best chance to understand how much of loan that you get. Next question here is a follow-up from Liu Kong. What is the DSCR ratio for SME loan? I don't understand this. I hope that you guys understand this.
Okay, DSC, I think DSCR he's talking about the questions coming about individual. See, for individuals, they look at debt service ratio. Whereas actually it's the same thing, but for business loans, they look at DSC, they got debt service cover. Actually, it both means the same thing. Basically, what I'm trying to say is this: if after lessing everything, your balance net profit, right, has against that the loan you're going to borrow is $1 to $1, that means your DSR or DSC is 1. So some banks say 1 not enough, 1.2 only I will approve. That means basically what they're trying to say is has to a dollar profit, you have $1.20 profit, and you borrow $1, I will approve. Some banks $1 to $1, I do it. Some says no, I want 1.5 times, meaning to say again, you borrow $1, your balance income must be $1.50. Then only I lend you. So again, different banks, different ways of looking at it.
Okay. Question here from Michael Suresh. So I'm running a construction company, A Syndrome Berhad. So we got that out of the way. We suffered losses in 2020 and 21, obviously because of COVID, right? So what are the chances of applying the TRRF by the bank? And is it open for all banks? I'm sure you both said it earlier, right? It depends on the bank. And any banks particularly with higher chance of approval. So let's answer the first one first. Is there good chance of applying for loan?
Brenda, you want to take this or I take this?
Go ahead.
Okay. For construction companies cannot qualify for TRRF. TRRF are not meant for construction companies. So no banks can do this. Basically, the Bank Negara says this fund is for other businesses, trading, retail shops, supermarkets, mini markets, that kind of thing. But construction, they will not. And then I want to add a bit more. In fact, besides this, even the normal loans, most of the bank now stop giving to contractors. I don't know why. Because I think they feel that this is a very, what they call it, dangerous industry to land under such times. Again, to me, if my father owns a bank, I'll probably look at the track record of the company. After this COVID thing, is the company still around or not? That's all.
Okay. All right. Cool. So next question is relating to house loan. How do you go about applying for a house loan for a sole proprietor? The bank that I asked for only take into account 10% of the net income declared to LHDN. Is there something I can do?
Okay, for housing loans, if you ask me, I'm not an expert, but I can share my insight. When they say 10%, that means that this bank is very, very, what do you call it? You ask me, I don't think...
Very risk averse.
You're going to qualify, if you ask me, because 10% of they take that as your repayment. So you ask me, better to go look for another bank. Like I always tell you, different banks got different ways of looking at how whether they grant the loan or not. Because housing loans nowadays those days you got a house now. Imagine you have a house now, no borrowings, but you need money to go and do your business. You want to give the bank as collateral. Some of the banks now even stop giving, but some banks still do. Again, like I say, they look at whatever criteria they are. But nowadays, because of this market, housing loans are a bit difficult to go by nowadays. Not easy to get. In fact, now easier to get a business loan rather than a housing loan, if you ask me.
Yeah, because at least business loans, there is a chance of recovering back those through sales and things like that, right?
Yeah, okay. Got this TRRF on so cheap. The Bank Negara is helping. These are things.
Okay.
In fact, a few banks, they totally shut down housing loan for sole proprietor, sad to say. Yeah.
Okay. All right. Thanks for that. Hope that answers your question. Okay. So next question. I tried applying for a loan. I got rejected. Should I even reapply?
Okay. It depends what reason. Is it about secrets? Let me tell you, guys, if it's about secrets, I think you either change the person's secrets. If it's a company secrets, then I'm sorry, no banks will look at it now. But if the reasons are anything besides that, it's possible. It's possible. You can come later and see you or Ray or maybe Brenda later and pick this up. No problem. You can come and see us. We need to know the reason why. Basically, if you ask me, your loan is rejected. The key is what is the reason, the main reason.
Okay. Next question here. Wow, we got a lot of questions, man. You guys are a hot topic. How long is the turnaround by the bank from application to disbursement?
Wow.
Okay,
assuming all documents are completed.
Yeah, you take this.
Yeah, maybe I can take this on. It really depends on how complete you can prepare your documentations upfront. Because very often, like I mentioned, a lot of times, sad to say, if you have a banker who does not know exactly what to collect upfront, then there'll be a lot of back and forth, yeah, which we see a lot of SME owners are facing. Yeah, so knowing exactly what to prepare upfront is very important, so that you don't have to, like, ding dong to and fro lah. Okay, so if everything is complete, and also what to declare. Yeah, if certain information provided is not sufficient, and the credit department feels that they need more information, then a lot of queries will come back to and forth as well. So that will delay. So I give you a typical timeline. If everything is smooth, and everything is complete for a working capital loan like TRRF, it ranges, again, depending on banks, from 2 weeks to a month for the money to be dispersed. Yeah, so it can be as fast as 2 weeks, but it can drag till as long as 3 months as well. So the key is really,
documentation.
the documentations, information that you provide. Yeah, that's the key.
Yeah, which is kind of that list that you provided earlier, right?
Yes. So
yes.
I want to add
But the list is of course, the list is the list, but it's the information, the documents that you provide. Yeah.
For example, for some business loans, some banks insist on your borang B and the borang P. Some banks don't need that. So again, certain banks got certain conditions, but of course we know some banks that can actually, provided you give the documents right from day one, within 30 days, they process, approve, and give you the money within 30 days. But there are some banks that what Brenda said, they go for 3 months, basically, because the credit asks questions, ding dong, up and down, many issues, it depends.
Okay, all right, great. Another question here is that, okay, are there any banks that loans to Sdn Bhd without audited accounts?
Yes and no. Okay, I think the timing has come. The banks actually were quite lenient here. Those days, any audit accounts more than 18 months, they want the audit. The audit. Nowadays, they have dragged it to maybe 21 months, right? But if you're Sdn Bhd and the last 3 years you have not audited your account, I think no banks will lend you any money, if you ask me. Very difficult.
Again, right, it goes back down to, right, David, is about we all have to understand that the banks are very risk adverse. So the banks want to protect themselves. So we've got to help the banks in that sense. We can't just get free money fall from the sky, right, on our laps. Yeah. Okay. So this is another which bank question. There are a couple of people here asking, so which bank is better than another bank? Which bank will apply the lowest DSCR, let's say 1-to-1? Any tips there? I know probably, that question you probably need 2 to 3 hours to go down the list, but any quick tips or anything?
Well, Brenda, you want to take that?
Okay, if you tell us about which bank, right? Again, it really also falls back on the industry that you're in. Yeah. So if, like, for example, construction, most banks are not doing, but a couple are. So if you're a construction company, then there are a couple of banks that are looking at that. Yeah. And let's say you have a logistic, some banks totally shut their door. So really have to know what industries you are in.
Okay, cool. And don't worry, everybody, right? I'm gonna give you guys a chance to, because we only have 1 hour tonight, so we can't answer everybody's question, but we will want to make sure that all your questions are answered, and we will give you guys the opportunity to do so. Last couple of questions. I'll take the last 3 questions here. So going back to just now the question on industries, Brenda, what about manufacturing? Can they apply for TRRF, or should that be applied as trading?
Manufacturing, TRRF, manufacturing companies cannot take. The government
cannot
allow. No. Again, there's always a way to show whether you're really. You see, always the thing is whether you're really manufacturing. Some companies do manufacturing, come trading. Now, question is it trading? Is it manufacturing? Again, experts can now position it properly before we go in. Probably your chances are better. But you walk in, chances are you probably cannot. Won't be able to explain to the banker, because the moment they hear that you're manufacturing, you cannot apply for TRF.
Mm.
I'm not saying no. I'm saying yes. Let's look at the business model again. How it works. Is it really manufacturing? Because some companies are a mixture of both.
Okay. Second last question. New cerebral heart, 6 months old. Can they apply for loan? Brenda?
Syndrome Berhad for 6 months, certain banks, yes, but the rate will be very high. You're talking about BRR plus 6, maybe even plus 9. So
BRR plus 9. Wow.
yeah,
Yes.
yeah, very high because the track record is, very short. So unless they're prepared for the high rate.
Okay.
Yeah. Again,
So the best is the 6 months Syndrome Berhad. If they have prior a sole proprietor or partnership, minimum 3 years, then it will be more palatable lah. Still can look into that.
Okay. So better borrow from neighbor lah. Okay.
yes.
Yeah. So there's this question here from Zainal. He has a problem. He's 55 years old. Trying to apply for housing loan. Secret is too clean. Okay, I'm not sure what secret is too clean means, right? I fully settled my previous loans, credit cards, car loans, thinking it would be good for a clean record, but can't get the loan. What should he do?
Okay, my advice to him is very, very simple. Now, clean secrets means now he got no secrets. The bank cannot judge whether he has good repayment track record or not. So if it's a housing loan, very simple, go and dig back your old records, your old housing loan records, and your old car loan where you're paid off. Take and sit down in front of a banker, ask the banker to look at this. Look, this is my repayment track record. If I borrow too much, you say cannot. Now I have a clean one, you also say cannot. But I'm sure, because what you want to see is repayment, character. If he can show that, I'm quite sure one or two of the banks will look at it. Again, different banks got different ways of looking at this. You know what I mean? Yes, it's possible, but make sure you have the record of your old loans.
Yeah, so show proof lah, right? So show proof of your ability, like what you said, right? One of the 5 C's, right? Capacity, right?
Yes.
Okay.
The other issue is you're 55. I think you can still qualify for a housing loan of maybe 20 years. Because some bank do 75, some bank do 70, some bank do 65. Again, depending on which bank you go to lah.
Okay. All right. Cool. Last question before I wanted to ask my final question, right? Question here from Tony. I have very little credit history, only 3 months because I just returned from overseas. However, my income of my business is very high. Can I still get a loan?
Okay. Again, it depends on which bank. So if you say your income you say you got 3 months, one side, right? The other side, you say my income from the business is very high. My question is high for 3 months. Question is, for the next 9 months, will it still be high? So again, this is a very judgmental thing for the banker to look at, basically. Again, it depends on what business you're doing. So you're saying it's high return. Is it what you're selling drugs? Oh, that's very high, basically. And then you look at, do you have enough drug addicts to take the drugs? So basically, again, for the next 9 months, or is that the market big enough? So these are the things that they will have to understand. But if you're 3 months old and you got no hardly any record, I think it's going to be a bit difficult to actually get a loan. But some banks we know of got this called startup loans. Startup means basically your business started, right? And you feel that if the business model is good, they'll give you a loan again. But these are the rates are very high. You can go as high as BLR plus 8 here. It means they are located at an interest rate of 13% per annum.
Okay.
Kind of thing.
Yeah. Okay. So this is something that I've always wanted to know, right? So there are actually a couple of different types of fundings, right? So there is, from a business perspective, you have bank loans, you have crowdfunding, you have P2P lending, you have, go and sell equity to a VC, right? Which one should a business actually look for?
Okay, you ask me, if you want it fast and simple, you're willing to pay the money, you go to a P2P. But it's very expensive. P2P can charge you as high as 20% per annum, 24% per annum. If you're willing to spend a little bit of time and basically go through the hassle, you go to banks, like I say. So basically, P2Ps, they are a bit more simpler. They ask for lesser documents. Again, that also depends on which P2P you go to. Some P2Ps are asking the same, like what banks are asking, but they charge triple the interest rate. So again, the P2Ps, different P2Ps got different way of looking at credit.
But just to add on, P2P currently the loan amount is fairly small. So
More. Yes.
What's the maximum? Is it 300,000 or even less than that?
100,000.
100,000?
Certain P2P is 100,000. Yeah, some higher. Provided you got collateral.
Okay.
Some can go higher provided you got invoice. You know what I mean? They finance your invoice. You know, can go 300,000, 500,000. It depends again. What is your actual borrowing needs?
But like you say, David, it's a speed. So if your margin is very high on your invoice and you really want the cash, then I guess it's okay, right?
Yep.
Right? And probably very little collateral or none at all. Right? Okay. Final question for the both of you. We've been talking for an hour now. Having already been working for the bank for so many years, and then now you both are on your own, what can we ask your help for? What does your company do, or how can you guys help?
Brenda, you want to take that?
Yeah, sure. Basically, we give financing advice. Yeah, in terms of, like you mentioned just now, we saw a lot of questions. Like a lot of companies less than 1 year or startups, they do not know how to get financing. We can provide advice to them in terms of the preparing for the future. Yeah, so that, like you mentioned earlier, right? A lot of people, when they do business, the loan is very taboo, right? Oh, I don't want to borrow loan. Yeah, but actually, it's not that the case. You don't want to leave it to the last minute. So we can actually, advise them in terms of how to better prepare in terms of the financials as well. Because a lot of times, business owners, they will leave it to the end of the year, and then they will tell the accountant, okay, I want to declare only 2%. So not knowing that by the time when they need the financing, the track record is not there because everything is kind of suppressed. So you need to know the sweet spot the sweet spot in terms of how much you should declare so that you can get sizable loan amount by the time you need it.
Yeah. And that is all your experience of managing, approving loans with a bank's perspective. I think you both have also done so much research. And, I think that when you both are saying, depending on the bank, I'm very sure that you have done all your research on which bank you'll be able to get more successful approval rates and things like that. So, yeah, so that's what I wanted to end with. And I'm going to ask you guys later of how they are able to get help. So quickly, Brenda, David, if anyone here listening would like to get some help, can they get a free consultation or something, just to answer some of those questions because we only have 1 hour. Is that okay?
Yeah, it's no problem. It's okay, no problem. And welcome to assist any SMEs out there who wants a loan. We're welcome to give free consultation. No big deal.
Okay, so awesome. Thank you so much.
They can go to you and release.
Okay, all right. So I'm going to announce that in a little while, everybody. So that has been our session. Thank you, David, for sharing with us really about the loan process and really looking at the 5 C's: character, capacity, capital, security, and condition, and really breaking it down for us. How do we get better approvals for loan? And Brenda, also, thank you very much for sharing with us the process, the document checklist, and so on. All right. It's been really great to have you guys. So for those of you who wants to get a free one-on-one consultation, let me show you how. Right. So you can scan this QR code, and all you got to do is just fill up a form. We just want to know your details so they can serve you a bit better and they can contact you. So it's a very quick form. Just fill in your name, your contact details, right? And then, somebody from their team will contact you, and they will answer all the questions that you may have, right? So do that. Also, there's a link being pasted in the chat room now. Yes, there you go, right? So just fill up that form, and you will be able to receive a one-on-one free consultation and a Q&A. They'll sit down with you for as long as you need, correct, huh? Okay, thank you very much, Brenda and David, for being here today, right? And really sharing very honestly, openly about the process and how we can all as SMEs take advantage of that. So thank you very much.
Thank you, Ray. Thank you so much.
Okay, and for those of you who understands what we do, leading in crisis is something that we want to help business owners, we help as entrepreneurs. So we invite SMEs every 2 weeks on a Friday. Next up is 3 simple steps to grow your business on live stream. We have a speaker called James Tan. He's the founder of an advertising agency called Mantra and a new setup called Clickboy. And he managed to do live stream himself and really raise revenue based on live stream, right? Facebook live streams. So he's going to be showing you how to get that done and how you possibly can get more sales using Facebook live stream as well. That's happening on the 8th of October, same time, same place on Zoom, 8:30 to 9:30 p.m. I will see you guys then. Thank you so much for being here tonight on a Friday night. And I wish you guys a great, great weekend here from Owner Circle, the business that helps business to achieve massive transformational growth. Thank you guys. Have a great Friday. Bye-bye.